I got punched and I didn't flinch. You have to understand that I live in Thailand and that's 12 hours ahead of the US markets. So when I invest, it's the middle of the night. Yesterday, something woke me up at 2:46 a.m. I checked the market, CoreWeave was down almost 10%. Headlines were flying, legal probes, analyst downgrades, all of it. And I had open positions on the table. There were 14 minutes left before the market closed. That's when most investors freeze. They want more time, more data, more confirmation. But markets don't care about your comfort. Sometimes they just punch you in the face. And in that moment, your only job is to respond, fast and clear. I made my move. And here's the thing, this 10% drop, it might be an opportunity in disguise. Today, I'll show you what the market missed, how I responded under pressure, and how this setup could turn into one of the biggest wins of the year if you play it right. Let's get into it. CoreWeave didn't just dip, it dropped almost 10% in a single session, and the timing wasn't random. It was a reaction to the full weight of a deal that suddenly got real. Here's what happened. The CORZ Scientific acquisition had already been announced, but this week the deal mechanics went public, and that's when the market got spooked. It's a $9 billion all-stock deal, which means CoreWeave is paying with equity, and that means share dilution. Then came the legal probe. A shareholder rights firm launched an investigation into whether the deal undervalues CORZ Scientific, and that threw a wrench into investor confidence. And finally, analysts reacted. Needham downgraded CoreWeave from buy to hold, citing valuation concerns. Other firms followed with neutral ratings and lower price targets. That's your triple whammy. Dilution, legal risk, and analyst downgrades all in a 24-hour window. The result? A fast emotional sell-off. But here's what most investors missed. The headlines look scary, but the business didn't break. The fundamentals are still intact, and when panic creates pressure, there's often a real opportunity hiding underneath. This is the bull case for CoreWeave. The market saw dilution, I saw vertical integration. CoreWeave isn't just buying a data center partner. They're acquiring 1.3 gigawatts of power infrastructure with expansion capacity up to 2.3 gigawatts. That's an insane amount of control over their back end. And instead of leasing that power for the next decade, they'll own it outright. This deal eliminates $10 billion in lease obligations and is projected to save $500 million annually by 2027. That's not just cost cutting, that's building a moat. CORZ Scientific was already one of their key hosting partners. This isn't a pivot, it's consolidation. CoreWeave is locking up its infrastructure stack, reducing dependency, and preparing to scale harder, faster, and cheaper than its competition. From the bull side, this deal strengthens CoreWeave's position long term. But just because the fundamentals look solid doesn't mean there isn't risk, and that's where we need to talk about the bear case. And let's be real, the bear case is absolutely important and it matters. First, this is a $9 billion all-stock deal. That's not a rounding error. It dilutes existing shareholders immediately, and it ties CoreWeave to a business model, crypto mining infrastructure that still carries stigma and volatility. For some investors, that's a red flag. Second, the legal probe isn't just noise. It introduces uncertainty and headlines, and markets hate that. If regulators drag this deal out or push for changes, the integration could get messy fast. And third, CoreWeave is already a high momentum, high valuation stock. When you're priced for perfection, any deal that adds debt, complexity, or controversy can rattle confidence, and that's exactly what we saw. Finally, there's a time lag between strategy and results. Even if this deal is smart long term, it could take quarters before investors see the upside. Meanwhile, the stock is under pressure now, and impatient capital is heading for the exits. The bear case isn't that CoreWeave is broken, it's that the path forward just got bumpier. And that's exactly why you need to know how to position smart, because momentum alone isn't enough when the narrative shifts. Now picture this, it's 2:46 a.m. in Thailand, I'm half a world away. The market is about to close in 14 minutes. CoreWeave is down nearly 10%, and I've got real money on the line. That's not a theory, that's a real position. I had a trade open, something called a cash secured put, which means I had agreed to buy CoreWeave at $145 if it closed below that level. But with the stock falling fast, that setup no longer made sense. so I made the move. I rolled the position down to $135. That gave me more protection, lower risk, and a better price if the stock keeps falling. I paid a small fee to do it, but because of the premium I've already collected, I'm still ahead overall. And here's the real point. I didn't guess, I didn't react emotionally, I executed. I posted the update to my community before the market closed. Real-time trade, real capital, real clarity. Because when the market punches you, you don't flinch, you reposition and get back to work. And lost in all the triple whammy drama was something the market barely noticed, but it matters. CoreWeave just became the first cloud provider to launch NVIDIA's newest Blackwell GPUs, the RTX Pro 6000 and the GB300 NVL72s. These aren't future announcements. Already live, faster performance, better efficiency, and massive scale. While analysts were downgrading and investors were dumping shares, CoreWeave was locking in first mover advantage with the best AI hardware on the planet. That's not noise, that's execution, and it's building long-term value. But while everyone's watching the headlines, they're missing the most important part. This wasn't just news, this was a test. And what you do next, that's what separates real investors from tourists. I didn't wake up at 2:46 a.m. to panic. I woke up, saw what was happening, and executed because that's what it takes when real money's on the line. Now I'm up 41% this year to date. The S&P 500, just 7%. That's not luck. That's execution. That's the power of strategy over speculation. I'm still very profitable on my CoreWeave position. I'm still in control, and now I'm watching for stability above $130. And if we get clarity on the legal stuff, I'll adjust my position again. But nothing about yesterday or this week changes my thesis. CoreWeave is still one of the best positioned, high-risk, high-reward AI infrastructure plays in the market. And this is why I don't run a copy trade service. I teach strategy because headlines hit, stocks move, and if you don't know how to respond, you're gambling, not investing. If you want to see exactly how I'm managing all of my portfolio, what I'm buying, when I'm rolling, and how I'm protecting capital, then consider joining my Patreon. It's only $30 a month. You get access to my entire multi-million-dollar portfolio, every trade, every move, zero fluff, all signal. Because my Patreon isn't about hype, it's about results.